And we are live. We are live. Been a while since we've done a StreamYard, but topic of conversation at the moment, as you can see from the screen share here in Google, 99% mortgage news. And that's been pretty much the topic in the property industry. The news articles have been interesting reading. So we've got me, Sanjay. We were going to be joined by Stephen. We don't know where he is. If anyone's seen Stephen, do let us know. No, he's not here yet. Oh, there he is. Look, he's just snuck in.
Oh, yeah, sorry about that.
Stephen.
Hello.
We were about to do a live video on the search party for you, buddy.
Nice. No, I'm here. Apologies. My computer's playing up. Don't know why.
No worries at all. So, as I was just saying, 99% mortgages, 1% deposit mortgages. Did not expect to read that this weekend when I was having a little look through the property news. We haven't actually debriefed. There is no agenda on this. So I don't know. Some people on this call might like them. Some people may not like the idea. Some people think it might just be fluff. But we're going to get a little bit of a vibe. So Sanjay, coming to you first, bud. What's your kind of take on it? Have you managed to read any of the articles, checked it out a little bit?
I've had a very, very busy day today. However, I have skimmed through the article and I have sort of tried to brief myself with it. I'm going to be honest with you. Like when these headlines, clickbait headlines come out, and obviously until it's officially announced or until it's officially implemented, we never really know how it's going to affect the property market. However, I do find that when these articles do come out, the conversations I start having with buyers and sellers becomes very around these headlines. So I'm going to be interested to see what the mortgage brokers that we have here think about this as well and how it's going to affect it. So yeah, very interesting topic.
Yeah, it is interesting because obviously we're due an election this year. So there's an element of tongue in cheek and the fact that, you know, they're looking to try and build a little bit. But then I was reading the Evening Standard article, which absolutely slaughtered the idea. But I think we also have to remember that if something like this was to come in play, there's going to be a small margin of people that will actually be probably in the requirements needed to get a mortgage like this through, I would have thought as well. But Tom, coming to you, buds, what's kind of your snapshot take on it?
Yeah, it wasn't what I expected to see over the weekend, but yeah, very interesting as to how it would be regulated and how it would be assessed by lenders, because, you know, rates, obviously, if you've only got like a 5% deposit, are much higher. So if you've only got 1% deposit, how are they going to price that? But my initial thought was that's quite frightening to see if this does come into effect, because say if you're, from how I've read this, and I've only just sort of skimmed it myself, but I think I've got the gist of it. Say if you put a 1% deposit down and then you do a 2-year fixed rate or whatever, and then in year 2, if your house value has gone down by 2%, theoretically, you're in negative equity. Most lenders won't let you refix onto another fixed rate. You will go onto their standard variable rate, which right now is like 8.5%. So the monthly payments will go through the roof. So I'd just be very intrigued to know how a lender would assess it, because there must be some serious stress testing involved here. Like, can you afford it on probably a higher rate anyway, but also you need to sign some disclaimers saying that you know exactly what you're getting into and what the payment will be in 2 years' time, potentially, if X, Y, and Z happens. So I think it will appeal to a certain demographic, probably people very, you know, high income, low savings, for example. But yeah, just very intrigued to know how lenders will regulate it really and how they'll assess it.
It's interesting, Stephen, because the problem for tenants at the moment is that there is not enough properties and rental prices have really rocketed out of control in the last 2 years. And maybe this is a way of saying, well, look, if you can afford these crazy rents, then why not afford a crazy priced mortgage and make the property your own rather than fighting with another 49 tenants to try and find one? Do you think maybe that's sort of the angle, Stephen, they're thinking?
I think it's already been discussed. I read that Telegraph article you put, and I think they did kind of touch on that it will help those in renting to get on the mortgage ladder. So I think it will. My worry, as Tom just said, smells a bit like 2007 to me.
Mm-hmm.
What, 100% mortgage problems?
Yeah. It because the house prices will increase.
Well, I think if the
And
house
people
prices go
they
up,
will go into negative equity quite quickly. But
I guess if the house prices go up, where they're okay, if they buy something a little bit over market value, or there's a little kind of shade of a drop in the market. I mean, we're talking 1%, aren't we? So there's just a slight marginal issue, and they're in negative equity, and like you say, they're sat on that standard variable. What's your thoughts, Fez? You've been in the property game for a while. What do you think? Like, is this something that could be really good for some people, but also a real risk for others? Or are you kind of thinking it's not going to happen? What do you think?
I think something will happen. I think that's pretty clear, is that there will be something in March in the new budget there for the property market. How it looks like, obviously, when we don't know yet, and this has only been leaked. So my first thought was, in an election year, there's probably focus groups up and down the country right now looking at how the public perceives this as a potential scheme that they roll out later in the year. My second thought was similar to what Tom said, is mortgage prisoners, is what happens if there is a downtick in the market and we live in these very uncertain times. So I don't know how much that's been thought out and how much this is being discussed by the government, but there's certainly things in there that they really need to consider. I think almost certainly, in terms of how it would function, is it probably something similar to the mortgage guarantee scheme, where the government effectively provides some kind of guarantee to the lenders in terms of sharing in the losses if somebody was to default on a mortgage. So that's probably how it would work if it came into fruition. But it's quite concerning in that sense, because I think a lot of the people that this product would appeal to won't remember what a mortgage prisoner is. They wouldn't have been around in the economy as such back in 2007, 2008, 2009, 2010 to really understand what it's like to be in negative equity. Because I remember when I first got into property, those were conversations I was having regularly, multiple times a day. I was calling people up. I was trying to get new houses onto the market. And, unfortunately, sometimes people said, we'd love to move, but we just can't. We're sat in negative equity. And then it becomes a waiting game of, are you going to survive for longer for the property market to recover? So it is a bit concerning. And I think because it's a leak, there isn't enough information for us to really sink our teeth into. But it just shows that they're thinking about it. I think this is the second or the third time that it's been mentioned that something's coming in March in terms of first-time buyers, and they have been the demographic that's been hit the hardest by what's going on with interest rates. Because
the bit that I think is interesting is the fact that we've got this real high demand of tenants at the moment, and the way that rental prices have gone, it shows that there's affordability there. In fact, I looked at average wage increases since 2019 pre-COVID. It's been a 15% increase across the country, which when you look at the rental prices, it's been a 26% increase. So rents have outstripped the wage changes, which has been interesting for tenants. But at the end of the market, where people are ready, what this applies to, I think there is some people out there that could make this work on affordability. We've got Ed checking in on LinkedIn. I've not read this, but I'll put it. House prices will never go down. There's too much of a shortage. They'll just stagnate while inflation and hence salaries catch up. I mean, obviously house prices have gone down this year, but nowhere near as much as what everyone had suggested. There was talk of 10, 15, 20% in some circles. It looks like it's more going to be like 2% on land registry. I personally don't think that house prices will drop in 2024, be it that land registry data in the first quarter may show a slight drop. But I think Ed's right. If they were strategic with these 1%, like you said, Tom, there, about a 2-year fixed. I think if you were going to be strategic with this, it would need to be 3 or maybe even 5 as a fix to kind of know that you've got that window of opportunity for prices to go up. So you're hoping in 3 years' time, in 5 years' time, there is at least 5% equity in there, I would think, for when you come around to refixing. But I ran the numbers based, Stephen and Sanjay, they work in Bracknell and Farnborough. And let's say the average house price around there, let's say it's maybe 400. So I just sort of took 50 grand lower than that for small 2-bed house, big 2-bed flats, some of the 3-bed terraces that are out there, maybe around the 350 mark. So I just took 350 as an asking price. If someone was to buy a property at 350, chances are at the moment they're probably going to be renting it around 1650, 1600, something like that. So they would have a mortgage of 346,500 with obviously 3.5 grand deposit put down. And I'm no mortgage advisor. This is not a mortgage rate that's going to be in there, but I assumed it will be high fives. So I just did 5.75 as an interest rate. It could be 6 something, but by the time something like this comes in, I thought high fives. So 5.5% works out as 1950 a month on that particular property. So £300 more than the tenant is paying, but that's over a 35-year fix, over a 35-year term, which seems to be the norm in the bottom end of the market or the first-time buyer market. I think this is only for first-time buyers. And I kind of looked at that and thought, would I rather be renting for however long, or would I rather be in my own property and paying a little bit more for the benefit of it? And I didn't know the answer to that question, so I thought I'd get that around the room. What would you be, Vez? Would you rather be renting someone else's property at a lower figure or buying at the higher figure?
Yeah, great question. I think to answer that question on a personal level, I would buy. Whether or not that's right for people is obviously different depending on their circumstances, jobs, future plans, and whatnot. But actually, I think one thing to consider in this is that's a lot of money to borrow for some first-time buyers, and they'd have to be on some very, very good incomes. And then even then, there isn't, a huge number of lenders that would go quite that high. So I think where this could really kind of take off is the shared ownership market, and where you've got that part by part rent dynamic where you're paying rent, granted at a reduced amount, and you're still buying a share that you're paying off effectively. So you can still afford that £400,000 property, but perhaps only be buying 125% share or a 35% share or a 50% share. So that's the point where I think from a mortgage perspective, that 99% becomes a little bit more interesting, because it does allow people to press on ahead with getting on the property ladder with a relatively low deposit. So yeah, I think in terms of that situation, I would probably still buy personally, but again, I think for a lot of people it's going to be a personal situation that they need to consider.
What about you, Sanjay? What's your thoughts? Are you renting or buying?
It is real difficult, as I said. Like, you can't really. It's so subjective to the actual individual, what their plans are, what they're doing. Personally, I would probably own, because I'm a bit of a control freak and I would like to change my house around a million times and do stuff. I wouldn't like to stay in the same position for a long period of time. But also rents will probably increase, so that figure might increase anyway. So, it's kind of like it swings and roundabouts, in my opinion.
I spoke to a dad today that's been in rented accommodation, sold their property. So I think they've been renting for about 3 years. So effectively a first-time buyer now. I don't know whether they'd be classified as a first-time buyer with this or not. But they said, right, now's the time that we need to buy, because it's so difficult to rent somewhere, and the risk factor of being moved out and not being able to find is just too concerning. And I've spoke to a lot of parents on the playground where my kids go to school, a couple of people that have had real struggles moving locally with kids at certain schools from a rental point of view. And they would be able to buy. They would become buyers. They can afford the rent. They just can't find the property. and potentially they'd be happy to live in a smaller property and own it than the bigger property and rent it, but location was vital to them. So I guess sometimes when kids and two household incomes, as in husband and wife, or husband and husband, or wife and wife, whatever the dynamic, if there's two incomes in there, then potentially it becomes a little bit more affordable. But I guess it all comes down to the property as well, Stephen. You know, you deal with all sorts of properties in Farnborough. There'll be some properties that as an agent you would go, I'll back that one. That's never going down in price. They're going to be all right. They buy that 3-year fixed. They got no problems. And then there's some where you think, oh, maybe it's built in the last 3 years, feels a bit top. So I guess the property is going to be really important in this decision making. Would you say, Stephen?
Yeah, I would agree to that. Yeah, not got much more to say to that. Yeah, because I agree with everything you've just said. It will come down to it, definitely, the property.
So I think on that note, I think it'd be interesting to see what the perception is behind, the demand in the market, because I think on the reaction articles that I read today, a lot of the speculation is this going to kind of pull the pin on the property market and then it's just going to go back out of control. And I think I'd be interested to hear other people's comments on it, to be honest, because I think we all have our own kind of ideas of what that might do to the property market. But to somebody that is in that position, I would love to genuinely hear what they think of it. I think that'd be really interesting.
Yeah, definitely would be interesting. Ed's watching on LinkedIn, and we appreciate your comments, Ed. Buy or rent, depends if they can come up with a deposit. I doubt any of my tenants have anything like that amount of cash. I don't know. I mean, at 1%, it's probably two or 3 months worth of rent, sort of at a maximum. It's not huge money to be able to put together. If anything, there's going to be some of the cash coming out of the rental property. But I do get what you're saying is how much money they're having savings. It's only going to appeal to people that have got extra money to kind of do it. They haven't got 5%, but they've got big salaries. I think that's the people it's going to appeal to.
It might be easier for family to help out as well, to get their loved ones on the ladder. If you're not talking about 10%, or 10% has only really sort of come back in the last year or so, but it'd be a lot easier to gift from a family member that can get them on the ladder.
Yeah, that's what you're thinking, Tom.
Yeah, it'd be interesting to see if the lenders would allow a gifted deposit, because when you're asking, if you would just look at your immediate family, how many people could lend you £25,000? Chances are probably they can't. If how many people in your immediate family can lend you £2,500 or gift you £2,500, that's probably a different conversation. So I'd be interested to see if the lenders would allow that. But just going back to the sort of own at 1950 or rent at 1650, it's the first sort of scheme that I've ever seen since I've ever started doing mortgages. I've always had tenants who are trying to get on the ladder say to me, look, we know we pay X amount in rent. We know we can afford the mortgage payment. Just our income on paper doesn't stack up. Now, I know those calculations you've done are a little bit different, but it's the first scheme I've ever seen come in which would actually almost bring that to fruition, where someone can, prove that they're, spending $1,500 on rent and the mortgage is about the same. Therefore, the lender will now accept it, because on paper you can kind of see, they can actually afford this. It's just, their income through an affordability calculator doesn't quite stack up. So I think for certain, for some sort of families and things, it could be quite an exciting thing. But I think going back to what you said earlier, Ian, there's no coincidence this is coming out in an election year, in my opinion, and it could be just some political point scoring, because I think in that independent article it said that in a poll they did, it was a sort of less than 10% of voters under the age of 50 would consider voting for the Conservative Party right now. If they've got to try and swing that somehow. So if all of a sudden you're saying to people in that age group, here's a token where you can all of a sudden get on the property ladder, I think that would be enough to swing a lot of votes. So you can argue it's quite clever politically.
It is. They've gone down the childcare route as well, free childcare as well. Not to go off subject, but that's two very, very appealing things.
Yeah, you can you can be as anti-Tory as you want, but if someone's all of a sudden not offering you home ownership and a reduction in your outgoings, you might be thinking this Sunak guy isn't quite so bad after all.
And they're probably, putting this out to their certain media outlets. Go and test that little story out, see what the feedback is. It's obviously how the game is played. You mentioned about it is interesting because normally a tenant is looking to buy a mortgage because the mortgage is cheaper than the rent. If we take this down to like 200,000 and run the same numbers, so you were getting a mortgage at 198,000, purchasing at 200,000 with a 2% deposit, with a £2,000 deposit, again on 35-year term, 5.75 interest rate. Typically, that £200 grand, one bed flat around here. It'd be different in other areas, but the rent normally is about the same. At the moment, they're about 1050, something like that, and 1050, maybe 1,000, maybe 1,100, depending on the area. That comes in at 1096. So we're talking 50 quid swing on the mortgage versus the rent at that level. Obviously, as you go up, the gap increases. But maybe this is more appealing in the northern parts of the country or in cheaper parts of the country. Maybe that's somewhere where this is becoming potentially something that would be looked at in outside of the home counties in London, potentially. I mean, in London, 500 grand purchase, this is going to be a lot of cash on a mortgage, isn't it? I haven't run those numbers, but we're talking big numbers. So maybe it's to appeal in those areas.
Do you think that would be appealing in terms of winning votes? If we go really down that route and just say, right, they're just testing the waters to see what wins votes, it's okay, don't worry, we'll just let you borrow more. Does that win you votes, or is that something a bit, I don't know.
It's appealing to something that a lot of people want to be on. That's the ladder.
Yeah.
So many people that are unfortunate enough, we do lettings, we get to see people's wages, and you think how are they not buying?
Do you think this would be more popular than the equity scheme they ran until recently, where they'd effectively top up with an extra 20% from the government in the form of an equity loan? Do you think that would be more popular from a buyer's perspective?
I mean, a lot of people are comparing this to Help to Buy, aren't they? Yeah. They're comparing it to kind of a bit of a Help to Buy scenario.
This is an extension of that, though, isn't it? That's where a lot of the budget's coming from.
The other thing, just where we were talking on the tenants and their affordability, on our Investors Corner podcast, Andy brought the data actually to this week's episode. I'm not plugging it, but I am slightly. He said that the data on 2023 for the percentage of rent that a tenant had for their costs, so their income and what percentage of the rent was 34% on average outside of London. So that's the kind of where the cash level is for the average tenant at the moment. Their income, household income, they're paying 35% of that total net income in rent at the moment. So you may see that the mortgage might be 40%. I don't know what that sounds like for affordability, Tom, but sounds like a lot of money to me.
Yeah, it is. And I mean, just going to Vez's question really quickly, I think the Help to Buy, because you were potentially getting an extra 20% or 40% in London, but 20% deposit, that actually brought your interest rate down because you had a larger deposit and that sort of thing. So I think that gave you a little bit more, obviously, security. So people like, let's just go for it. You could argue the prices, because it was mainly on new build homes, wasn't it? Did the price go up by sort of 20% as a result of it? So I think this is obviously just a lot more risky. Because the Help to Buy just gave you a lot more sort of equity and brought the interest rate down. But just talking on just risk really quickly, I think just politically, if they do go ahead with this is a huge risk for them, because if it backfires, I think that is absolutely curtains for them, because we had the sort of 2022 saga where everything all just sort of blew up when Liz Truss announced her budget. I think people are sort of, their patience is wearing slightly thin with the current government. I think if they were to announce something like this and it didn't come off, then it's just I think that's just nail in the coffin for them, really. But it probably wouldn't happen until 2025 anyway. But it's it's difficult, isn't it? Because you want to be helping first-time buyers wherever we can. We want to help people, achieve their dreams. It's what me and Vez. It's what we enjoy doing. Is helping people finally get on the ladder, but it's at what risk really, and so it's a real tough one.
See, I still feel there's so many better options than this, and I know it will never happen. But I've never had the conversation with a mortgage advisor, I don't think. But if you were looking down this avenue to try and support and bring forward first-time buyers' moves, if you were buying under 500,000, to have the ability to add the stamp duty to the loan, I just feel that would be a nice simple kickstart. It's not like the stamp duty holiday that we had for a year in 2021 or 2020 through to 2021, where everyone was saving 15 grand, boom, 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 and it went frenzy. It would just allow people to, almost where we've had a deficit of buyers, transactions were down 18% on land registry last year because everyone moved forward with stamp duty. It maybe just gives people 3, 6, 9 months jump on their move because they've got a couple of grand's worth of money being added to the loan, and they're still putting down 10, 15, 20% deposits, whatever it may be. But they just feel like they're not shelling out tax instantly. It's being added to the loan, means they could maybe buy a property that they can furnish or whatever. Just a little something like that might feel like a little win that would be quite interesting. And I know that would never happen, but in the back of my mind, I just think something like that would be quite a nice, simple win that would potentially work. What do you think, Vez? I can see your brains going, I don't know if that's good. I don't know if that's good. I don't know if that's bad.
I think for me, it's you just have to be a little bit careful in terms of, obviously over the course of that 35 years, you're going to be paying interest on that stamp duty, not just the stamp duty back. So I think that would be my only concern in terms of just making sure that people are aware it's not a case of just adding X amount onto the loan. If you borrow an additional £6,000 over that 35 years, you're going to pay back a lot more. So that'd be my only concern. But what I can agree with you with is that I think something definitely needs to happen. There needs to be some kind of shift in the government's view towards the property market, because it does seem a little bit we're kind of plugging holes, or they're plugging holes at the minute. I don't think I've got the right answer in my head, but I'd like to see it perhaps discussed a little bit more out of the election cycle, if that makes sense. So not just kind of.
It'd be good to get your view on this, Sanjay, and quickly, Stephen, because what Vez says there is a good point. Should we just leave it alone? Like, are we just at the cusp at the moment where it just feels everything's a bit more normal? Like, there's no crazy, prices sort of feel level. Price well, you sell. Don't price well, you don't. Buyer activity's okay. Mortgage rates are getting there. Like, should we just leave it alone, or does it need a little sprinkle here or there? What do you reckon, Sanjay?
I don't think the government care about your opinion, but at the same time,
Thanks, mate.
I agree with you, though. I agree with you. I don't think we need to own anything. We're in a real good, stable market. There is so much positivity, and this short-term political fix is what they're branding it, or some people are branding it. It might just muddy the water and make it slightly worse and have a bit more of a turbulent year than we don't actually need to. So yeah, I'm in agreement with you on that one.
Yeah, what do you reckon, Stephen? Needs a little sprinkle, or just leave it alone?
Unless they were going to, I did actually quite like your idea of adding. I don't know what you're saying, Vez, but people take loans out knowing they're going to be paying 11 grand rather than 9 grand on the loan. So people do that because the monthly income is a lot less, monthly outgoing, on the mortgage. So I think it's a stamp duty, but no one's going to be listening to this from the government, and they're not going to take, that idea on board. I agree with Sanjay and yourself, Vez. They're really trying to fill a hole with like a triangle shape. It's just not working. Leave it alone. They've done so much to the housing market over the last 3+ years. Just let it be. I do feel like we're okay at the moment, and the signs are positive. This year, looks like it potentially could be a good year all around.
Yeah.
So just leave it be.
I think
I think the big worry they have is having 18% less transactions on average, you know, where normally we see about 1.2 million transactions a year. If it sits at 1 million or 950, economically that has quite a big problem cycling all around. But actually for the homeowner, this year's it's not made much difference really, because there's a low level of stock and the buyer demand was kind of leveling out in the earlier parts of last year where mortgage rates were so high. Sort of didn't really affect anything. Prices stayed the same. People moved if they wanted to. If they could afford to do it, they would. If they couldn't, they didn't. So it sort of just like naturally formed its own market really. And I think that's where we're at now. That my view is, you know, it doesn't really need a sprinkle. Just, I've got a webinar tomorrow and one of the questions is, are we in a normal market yet? Well, what's a normal market? You know, I don't think we'll ever see normal again. Every year it's the market we're in. So, you know, sometimes you just need these natural climates to just be what they are naturally. That would be my view. Tom, anything additional from that before we wrap up from you, bud?
Yeah, I think my final thought is one thing it doesn't address is affordability. Is so, you know, I get clients who have got a 10% deposit, but their income isn't good enough to get the 90% mortgage. So this doesn't help people whose income, this is probably more prominent in the south than the north, but unless they're going to change affordability caps, you know, loan to income, you know, if they're going to go over 5% or something, it doesn't help people whose income is still not good enough to get the mortgage they require, because you're actually looking to borrow more. So that's just the one thing it doesn't quite address. So yeah, that's my sort of final thought on it really, but it'd be very interesting to see if this actually happens or not.
Well, it's been discussed, isn't it, at the budget on the 6th of March. So I'd imagine you might not hear much more until after that.
Yeah. Well, whenever we do get news, obviously we'll be putting it out on our socials. You know, this came out really this morning's newspapers, and we wanted to jump on live with obviously people that have been in property for a long time, mortgage advisors and estate agents. So don't forget to follow the socials. If you're in need of a mortgage at the moment, or you want to chat mortgages and you want Vez or Tom's details, drop us a DM in the Avocado group and we can obviously put you in contact. If you're selling or buying in Farnborough and you want to talk to Stephen, he's your man. He is the go-to, the goat of Farnborough, as he's called in the estate agency world. And king of the video, king of the marketing, king of the Bracknell estate agency world is obviously Sanjay. So if you're buying or selling, don't forget to follow Matt and Sanjay's socials and get in contact with them as well. And if you want to talk to me just because you want to have a chat with me, then drop me a DM as well. So, gents, it's been really good. Thank you for all your input. Very interesting. If we're not live, you're watching till the end, you can still comment. I will pick them up and we'll respond to your comments. And thanks to everyone that joined and watched so far. Have a good rest of the week, everyone.
Cheers, guys.